In this episode, we speak with co-founder and CEO of Modernizing Medicine, Daniel Kane. Founded in 2010, Modernizing Medicine is a healthcare technology company that is transforming healthcare through specialty-specific, intelligent platforms to increase practice efficiency and improve patient outcomes. An entrepreneur, Daniel has a Bachelor of Science in Applied Economics from Cornell University, where as an undergraduate, he co-founded Blackboard Inc., raised over $100 million in venture capital, and in 2004 helped take the company public. In 2011, Blackboard was sold for over $1 billion. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Dan, thanks so much for taking the time to chat with us today. It's a delight to be with you.
My pleasure.
I think there's a lot we can cover within the realm of entrepreneurship. It seems like you did start early on relative to maybe other entrepreneurs out there. You started in college. Can you give us a little bit about how you came to co-founding Blackboard?
Sure. And I think it's less exceptional these days. I think entrepreneurs have now proven they come from all ages and backgrounds, but certainly in the 90s, there were fewer entrepreneurs that scaled when they were in their undergraduate years. I think the dot-com days sort of showed that, well, at least a few of them sort of knew what they were doing. Though in hindsight, we had no idea what we were doing. My first taste of serious entrepreneurship, besides lemonade stands and other sort of figure out how to make money as a kid opportunities, was during my undergraduate years at Cornell. Between my freshman and sophomore years, I joined with some friends and started a company that really just built websites before they're even called websites. So this was in 96, 97, the first browsers are coming out, and I knew that this would impact education, which was the only real business I had been in as a student, not from a faculty's perspective or staff. But I knew that it was going to play a pretty big role, and I started to design some websites. Demand for that quickly grew to other classes. I asked my housemates at the time, hey, do you guys want to make a little more scratch? We can, build these course sites, I think we called them, for other professors. And you could tell by how good the week was by the type of beer we would have at the end of the week. It was a crappy week. It was Beast, and it was an okay week. Rolling Rock, great week would be Sam Adams. Exceptional, we would buy the liquor. It's great. So yeah, long story short, demand outgrew supply of our ability to manually build websites. And so we started to write automation. Pretty soon the automation became good enough for us to license the tools to other universities. And one thing becomes another, and you've got Blackboard.
And how quickly did you realize that you were going to build this into a business, and then you had your sight set on growing, as fast as possible?
I mean, a business is a big word, right? I would say we knew we had a product after the second university raised their hand and say, we want to license that, right? At that point, you're like, okay, one is interesting, two, licensing it, neat. But when the third, fourth, fifth are like, we want that here, the light bulb is like, okay, you've got a product. Now, a product doesn't make a company, and a company does not make a business. And so we went through the painful process of trying to learn how to become a company and then how to grow that into an actual business through a lot of trial and error and a lot of making great mistakes. But I knew we had a company sort of at that third, fourth, fifth person raising their hand and saying, hey, in exchange for real money, I will expect real software. And you will support it, and you will come here and install it and help us. And that's when we knew we had something. I don't think we knew back then if we understood how big it could become, but we knew we were onto something because people were willing to part with their hard-earned money to pay us for our scripts and software.
Do you think you would have still founded the company had the environment been different, or was it because you were at Cornell, you happened to meet the people you met, and you happen to be kind of just brainstorming? I'm curious what your view is.
I think it was a series of fortunate, happy encounters. I think I was literally in the right class or the wrong class at the right time, and I got frustrated with the lack of ability for me to take notes. So I went to the professor and said, would you give the students the notes? And she said, no, that wouldn't be fair. And I said, well, what if we could give it to everybody? And she said, well, how would you do that? And I said, well, there's a thing called Gopher. No one remembers Gopher. It was before the web. And I'm like, I can put it on Gopher and I can show all the students how we can get the notes and print them before class from our dorms or our library. And we can come to class with the notes. And she's like, worth a shot. So had I not been a frustrated dyslexic student taking statistics. And had I not been in a class where the professor, Dr. Van Ness, said, sure, we'll give it a try. No, maybe this wouldn't happen, but those things did. And I went in front of the class and I said, hi, I'm Dan. I'm going to build this thing and you guys will all be able to click and download the notes. And everyone cheered because we were just spending our time in class trying to copy all these stats curves and weren't learning, and we wanted to learn. And so when we could download the notes and print them and take notes in the margins, it got better. And it was in that one semester that others started to ask. And then, had my friends not, been a different group of my best friends. And some of them had been, my best friends were engineers and one was ORIE. And then so it was a diverse group of friends with different backgrounds. Had that not all been there, none of this would have worked out. But we had the right group at the right time and the right ambition. And we were bold enough to think that we could turn a prototype into a product and a product into a company and a company into a business.
And to take the company to where you and your co-founders took it requires a lot of teamwork. It requires a lot of going through tough times together. And you were relatively young. So what are some key learnings for the early stage entrepreneurs out there? How are you able to, as a team, get through all the challenges?
To this day, I stand in such awe of how much confidence we had in each other because it was undeserved. None of us, myself included, deserved that much confidence, where a group of really, really smart people decided as they were finishing up college to abandon jobs, great opportunities at great consultant firms and at great technology companies and great accounting firms and say, you know what, we believe in this and we are going to stick with it together. That's crazy. I mean, that's a big leap of faith, but there's wonderful opportunities in life where your risk tolerance is higher. And certainly graduating college is one of those. We were used to eating ramen and drinking Rolling Rock. That was a good week. And so we didn't need a lot of stuff. We didn't need big paychecks. And so we could reinvest a lot in the company. And I know a lot of the people that listen to your podcast maybe are in a different stage of life where their risk tolerance is different, which means they just need to be more thoughtful. You still need to take the plunge and you need to take the leap at some point. But you can spend a lot more time testing the market and the product fit and making sure you've got something before you really go all in. But at some point, you have to go all in. Companies do not make it on nights and weekends and off cycles. It takes 110%. And I marvel at entrepreneurs that are I'm working on 3 ideas. I'm there isn't enough time in the day for one. Really well executed idea. So how can you split your brain and split your time? And don't you think you'd be better off putting all your effort into one thing rather than dividing it? Some people can do it. Apparently Elon Musk is one of them. So good for him. I'm definitely, no Elon Musk, but I could only do one at a time.
Right. How critical is it to have co-founders?
I would hate to be an entrepreneur without a co-founder. It is so hard just to shoulder the weight. You need someone for the highs to celebrate with, otherwise it's awfully lonely. And you need someone when it's dark and low and you feel like you can't move on and to pull you through it. And I've always in my companies had multiple friends, multiple co-founders, and it's something I would hate to think how hard it would be to do it without them. I know on my own, I don't know if I have the determination and willpower just to, see my way through all of those, especially the lows. I mean, the highs are fun. They're way better when you celebrate it with people. I mean, again, I wouldn't want to get all the way to the top of that mountain and be like, I did it. It's so much more fun when we did it.
Right. So I want to try to summarize Blackboard because it was a successful outcome. Can you tell us a little bit about just weathering the tech bust storm and then coming out the other side? And then we'll switch over into modernizing medicine.
Sure, happy to. So it's funny because right now the economy has got high interest rates and low investment and it's tough. And if you haven't weathered a storm or 2 or 3, and this is your first time in choppy weather, it's hard to know that this too will end, right? This too shall pass. I promise everyone in my company, I've weathered a couple of these. They're not particularly fun, but you survive them. And sometimes you survive them and your competitors don't. And you come out strong and they come out weak. And then, times are wonderful because all that need hasn't gone away. And it's just queuing up, waiting for the market to be able to be accessible again. And so, if you can get to the other side, you're actually in almost every case a much better place. Blackboard grew. We raised capital. We merged with a group to form Blackboard Inc. In Washington, D.C. in 1998. We raised multiple rounds of early stage venture. Again, as a kid, didn't really know what we were doing, but we had pretty good advisors and pretty good legal advice, accounting advice, venture capital advice. Scaled the company up and out, eventually reaching the point of, well, the first .com implosion, but we were recurring revenue. And I remember vividly board meetings where people were like, why are you trying to sell software when it's all about eyeballs? And I'm looking around saying, there wasn't a single class I took in accounting that said you can monetize an eyeball like easily. I don't remember that conversion ratio, but I definitely know that universities will pay us dollars on an annual basis to license technology. And so that kind of seems like a better way to go. And I remember people were like, you could put banners. I'm like, I'm looking around classrooms and I'm like, I don't see any banners in the classroom. I see them in the stadium. I see them in the student union. I don't see like classrooms sponsored by, Gatorade. Nothing against Gatorade. Gatorade's great. But I felt like that was, I don't know, somehow the classroom was like a holy place that we couldn't, sacred, and we couldn't put ads in them. And so somehow we got through that time without trying to give away software and monetize banner ads. And recurring revenue is like one of the most powerful things on the planet. You tie in a good recurring revenue with low churn, and you'll find out that you can put in really simple mechanics like CPI plus a modest amount, and people just will put them in and pay them. They expect it and they budget for it. So selling into higher ed is one of the hardest things any company can do. But once you're in, it's super sticky. And if the university already they know, okay, every year I pay for Blackboard, it's going to be CPI plus 4. Great. They just know that it's, cost of living, cost of development, cost of labor. It's all baked in. There's no real negotiation and they don't really churn. Now, on a long enough timeline after private equity, so Blackboard survived the .com, went public in 2003, if my memory is serving me right, and scaled as a public company for many, many years, 7.5 years-ish. By 2011, Providence Equity had come in and taken us private. And it was a good exit for everyone. They paid a premium over the price. And look, 2011 is not just past the second .com meltdown. It's also just on the other side of the 2009, economic burst with real estate. So Blackboard had weathered quite a few storms and was a pretty strong company. It had sales in all 50 states and in over 100 countries in 22 languages.
And then it seems like you switched over into your next venture fairly quickly. Were you already thinking about like, what am I going to do next? What is the next chapter? And so you enter into the healthcare.
I did know that I wanted to do something that had meaning, like where you don't have to fake a reason, right? Fake a cause. And so doing stuff in education, specifically higher education in K-12 felt great. I didn't have to fake a mission. And so I knew I wanted something like that. And I had met my co-founder in 2009. He was my physician. I made fun of him. He didn't like that. Turns out doctors don't like being made fun of, but he was using paper. It was 2009. I'm like, come on. It turns out that he was like, well, there's quite a bit of bad software out there and it slows me down. And there's an opportunity, I think, to do something faster. And I didn't know exactly what he was talking about, but I said, all right, let's explore this and sort of take our time and really explore the market, because it actually in 2009, 2010 was an insanely saturated market. It just happened to all be the wrong stuff. It wasn't built for usability. It wasn't built for performance. It wasn't built in the cloud. It didn't use AI. And so I went back to him and I said, you know what? I think you're right. He said, great. What's that mean? Are we co-founders? I said, yes, but I'm going to need you a day a week. He's like, do you have any idea how much, I have to sacrifice to take a day off work as a practicing dermatologist? I'm like, I think I do. But look, I can't build this company on my own. I know how to build technology companies. I don't know the first thing about dermatology. Mm-hmm. He's like, it's okay, Dan, I will teach you. And I'm like, doc, I didn't do residency, didn't go to grad school. No idea what you're talking about. So I have a better idea. After 3 weeks of him trying to teach me derm, I said, at that time I had young children. I'm like, I've taught my young kids how to program. You have an MD, MBA. I'm pretty sure I can teach you too. And I taught him the basics of programming. I taught him Java and JavaScript and XML and a bunch of other sort of coding and coding techniques. And I said, now you can run as fast as you can and take everything that's in your brain and put it into the computer using object-oriented notation and reusing objects. And he's like, this is amazing. And to this day, we've hired 23 physicians, taught them how to program, and they're on staff at ModMed. And they are not cheerleaders. They're not subject matter experts. They are not UI designers. They are programmers. Mm-hmm. They take their brain and they code it into the machine, and then the AI learns from them and then it learns what other people are doing that's similar to them, but not exactly like them. And then it adapts. And that adaptive learning is what made ModMed so surprisingly popular.
Interesting. I mean, that's very unique to have doctors be the programmers. And I guess that was the most efficient way to do it
It was
versus.
the only way to do it. I mean, the alternative would be doctors as subject matter experts, and then you hire business associates to try to write requirements that go to product owners that get translated into developer sprints and epics. And then it's no, the only way to make this thing work was to hire doctors and say, you teach the computer, you tell us what sort of systems you need, but no, you teach it the workflow, you teach it the how to take a history and how to write an exam, and you teach it how to bill, and you teach it how to code, and you teach it. And then from there, because it's written in modern object-oriented notation, we can learn, we can adapt to each provider's way of practicing. So yeah, modernizing medicine, ModMed is, I hadn't heard of a lot of companies doing that, though it makes perfect sense. I can't imagine us having done it any other way. We also got this company financially off the ground in a really unique way. So same time, right? So I'm helping transition Blackboard to private equity, but I had left by then, by the time Providence bought it. And I'm working on raising capital. And I'm like, I am a co-founder of Blackboard. This should not be a problem. It turns out when economies are rough, it does not matter your pedigree. It doesn't matter how big that exit was. Companies are not getting new capital. They're just doubling down on their existing portfolios and weathering the storm. So everyone opened the door and everyone took the meeting and no one was going to write a check. But a really interesting thing happened, which was a few of them wanted to learn more because they had made money with me before. So they were the ones who were like, okay, Dan, yeah, see, you're back at it. Let me understand it. But we don't know medicine as well as we know education. And I said, no problem. Let me put you in touch with some of our beta users. But I had to ask, of course, my beta users' permission. Could I put you in touch? We're doing due diligence. So they're doing due diligence on us. Could you answer some questions about why did you choose modernizing medicine? And what do you think our prospects are for the future? And our users, we had about a dozen beta customers. We're like, wait a minute, you're raising capital? We believe in this. Can we put money in? And I'm like, oh, that's really flattering. Like, you don't know me. I don't know you. You agreed to be a beta. We met at a conference or a trade show, but sure, I would love that. Look, we're not going to negotiate valuation. It'll be a discount to the Series A, but you'll get a good return. And they're like, whatever, Dan, we'll send you, I don't know, what's good, 50, 100,000, 200, can we do 200,000? And I'm like, whoa. And then they start telling their peers. They're like, guess what? We switched to this new technology company, ModMed, and it's the best thing we've ever seen in dermatology. It shaves down minutes per patient on documentation. It makes our billing more accurate. And we just invested in them. And all of a sudden, there's like a line of people saying, we want your software. We heard it's amazing. And is there still an opportunity to invest? I'm trying to turn off that spigot as fast as I can because I'm like, I thought we would need a couple 100,000. I put my own money in. So, Michael and I each co-invested. We didn't need to raise months, but by the time we turned the spigot all the way off and said, we're done, we had raised over $9 million from our users, which is like very Kickstarter-esque before Kickstarter.
Yeah. Ahead of your time for sure, and in various phases. So I'm wondering, what was the biggest challenge? The second go round, obviously raising money was difficult, but having the benefit of building one company, I presume that kind of transfers over into the next company. Were there any surprises that came about as you were scaling, modernizing medicine?
So many surprises, some delightful, some unwelcome. But anytime you go to move a really large, well-regulated industry, you will find just roadblocks and barriers to entry that someday become moats that protect you once you cross them. But when you're new, they hurt and they are expensive and they are challenging. And I think every startup underestimates the amount of overhead that regulated industries can just create just by the fact that, look, healthcare is life and death. You cannot have patient safety issues. But the level of rigor and oversight in healthcare was a surprise. Not a bad one, not an unwelcome one, but a surprise. But ModMed is now, we're almost 3,700 total team members. We are giant now. And I've taken a lot of the things I learned, both good and bad, from Blackboard and brought a lot of them here. And some of them, we've been able to keep that sort of startup mentality a lot longer. I think one of the things we gave up on intentionally at Blackboard is shortly after we went public, we felt the need, like we had to, quote unquote, grow up. You do need maturity. You need to be buttoned up, but that doesn't mean you need to stop having fun. And I think at Blackboard, at some point, we lost a little bit of the joy and the why we were doing what we're doing. It became less about making a tremendous impact on education and more about let's focus on the business and the operations and quarterly reporting and earnings. And look, all companies need to generate growth in EBITDA, right? That's why we're in business, right? And you should be optimizing for one, the other, or both at any given point. But at some point being public, it dwelled on me that there was an overemphasis on the short term and driving more profit than there was on having an impact. Like impact for me in education was measured by when we get to 1 billion students that have touched this damn thing. That to me is like I've left an indelible mark on the world. The same thing with modernizing medicine. Like we've done over 500 million encounters using the system. Like that's how I measure impact, right? How many doctors and patients have been impacted by this technology? Investors will think differently, right? They will think in terms of growth and growth rate and profitability and free cash flow. And so you just need to be aligned with your investors. And so long as you have alignment, you're going to be in a great place.
I've got a few questions remaining. And so maybe we can do this in a kind of rapid fire round. But I do very much appreciate all of your insights. They've been tremendous. And so the first one is, can you tell us the best piece of advice you've ever received related to being an entrepreneur, or the best insight that you've come up with along your journey?
Oh boy. Best piece of advice I ever heard was by far that you just cannot listen to the negativity. There are so many people in this world that will just say, you can't, you shouldn't, you won't be able to, you're going to fail. And not that you should just completely tune them out, but you should completely tune them out, right? And you should surround yourself with people that believe in you and that believe in your idea. And look, belief doesn't mean it's going to be successful, but there's no way you're going to get there by just, investing in and feeding the angry, monster. You need to feed the monster that's happy. So we need to make sure as entrepreneurs that we are tuning out to the degree we can, the people that just are can't, shouldn't, wouldn'ts, because no company ever got off the ground by listening to those people.
Right. Next question. Are entrepreneurs born or made?
Innovators are born, entrepreneurs are built, 100%. So people who can have ideas, the ideas are, no offense, ideas are a dime a dozen, lots of ideas. To be an entrepreneur, you need to understand the manufacturing and building of a business. And it's something that is now taught in schools. It wasn't when I was an undergraduate, but it is mechanics. It is a little bit of business law, a little bit of finance, a little bit of accounting, a little bit of HR, a little bit of evangelicalism and marketing and sales. And you are absolutely, you may have the spark and that might be innate and born, but a great entrepreneur is built, not born.
Fantastic. Okay, we're coming up on our last two questions. One is a person who has had the most influence on you.
My mother has had the most influence on me by far. She was, well, I guess once you're a law professor, you're always a law professor, and would grill me on the tax benefits of an LLC versus C Corp versus an S Corp as like a 4-year-old. So I really did have, again, one of those entrepreneurs are built. I mean, I had a business law professor mother who would not take an answer at face value and be like, okay, why? I'm like, I don't know the tax code. Like, what do you want from me? I'm 7. I mean, it was wonderful, but she was always, obviously as a mother, super encouraging. She was always my first investor in the companies. And so it's great to have your mother in your own corner rooting for you and opening doors. And, if she didn't know the answer to questions, she knew a professor that taught X or Y or Z. And I don't know patent law, but I can introduce you. You can ask them a question. That was always super, super helpful.
Excellent. Last question. Can you tell us about a charity, cause, or other endeavor that you are passionate about?
Oh, education, STEM specifically. It's funny because it's gotten so much attention. I don't think people realize that it's still a gap in the US. So despite all of the attention that STEM, science, technology, engineering, and math has received in the last decade, the US is woefully behind the rest of the world. And so STEM education is a big gap still, access to quality STEM education. I'm very proud of the fact that I created an institute. I get to name it after myself when you create an institute. That's a really cool thing too. So I gave a nice sized gift and created the Kane Institute for Advanced Technology here in Boca Raton. And it has, the kids have, I haven't done anything except give them money. it has swept STEM awards nationally, internationally, because they finally had the resources to build an underwater robotics team and a drone team and a supercar electric team and a solar this and a this, that, the other. And like this generation, if you just give them the tools and a little bit of encouragement and a little bit of like how to, they just run. And so just seeing that unlocked in the next generation just brings me unlimited joy. So I will always have a special soft spot for education. And I really do think that science, technology, engineering, and math, you really get switched onto it in middle school and in high school. And so I think the US is doing better at elementary school at the basics of math and science, but there seems to be this big gap in middle school. And if we can focus our attention on that, I think we'll stop losing so many, potential innovators, inventors, scientists, engineers in middle school, for whatever reason, are like, well, that's just not cool. STEM is cool. Just ask the Black Eyed Peas. They do the big concerts.
Well, Dan, want to thank you so much again. This was truly a treat for me, and I know our audience is going to find this very insightful.
Fantastic. It's an absolute pleasure. Look forward to talking again.